there is a lot of focus on increasing the renewable energy portfolio in the overall power sector. So till now that 191 gigawatt has been the installed capacity, where we are expecting by 2030 to reach to around 500 gigawatt. So we have already supported around 25% of the renewable capacity, and we hope to maintain a similar share going forward also. We have the largest outstanding book for the renewable, which is above 60,000 crore, and cumulative basis, if you ask me, then we have sanctioned around 2 lakh crore, and disbursement is more than 1 lakh crore towards the renewable sector.
Another thing which caught my attention was your cost of funds, which has reduced. If you have the comparative figures, it's at 7.37%. Do you plan to maintain this at this environment per se, where lenders are finding difficult to manage cost of funds?
See, the cost of fund, I agree that it largely depends on the market dynamics. If the overall cost of funds is increasing, then since we are borrowing from the market, for us it has also to increase. But however, we are managing in two dimensions. One is prepayment of the high cost loan and replacing it with the current cost or the lower cost of funds. And the second thing is maintaining a proper mix between the foreign currency borrowing and the domestic borrowing, that too between the bonds and the term loans. This is how we are able to achieve the reduced cost of funds, as you are mentioning.
Reserve Bank of India has recently come up with draft project financing norms, and as far as the estimates which analysts had, there is a major impact on your company particularly. Have you done some kind of assessment if the project financing norms which are implemented in current form? Because generally in draft norms there is no specification of provisioning per se, but here Reserve Bank has specified that 5% provisioning is there. If there is a delay, additional 2% is there. So what is your assessment? Had these norms been implemented in current form, what is the impact?
See, Reserve Bank has always been giving guidance about the non-performing asset or where the restructuring of the project financing is done. So earlier they said that if the DCCO is extended beyond 2 years, then you have to provide for 5%. Still, what are the draft guidelines? We are examining in detail, but from the upfront reading, it seems that the intention is to provide for 5% within the initial extension of DCCO for 2 years. Okay. If you ask the impact on PFC's balance sheet, PFC has been following India's accounting systems, and whatever is the difference as per the RBI guidelines and the ECL model under the existing accounting practice, we provide for the impairment reserve in our balance sheet. So there is no direct impact what we see on the profitability of the company. Yes, there could be some adverse impact on the capital adequacy, and as a result on the growth of the company, since there is some reduction in the tier 1 capital. But you might have seen our results. So on the capital adequacy front, we are comfortably placed at more than 25%. If I talk about the total capital adequacy, with the tier 1 more than 23% as against the RBI minimum capital stipulation of tier 1 of 10%. So we are comfortably placed, and we don't see any immediate major impact, but however, these guidelines have to be viewed in detail, whatever final guidelines come.
My last question will be, what will be your focus area per se for this financial year? Where do you want to focus as a company? Now you want to focus on private sector as well, renewable. What are the key areas where you are looking forward?
In PFC, we have been lending across the value chain in the power sector, be it the central sector, be it the state sector or the private sector. It all depends the focus of particular segment on which there is a private sector participation is there or the state sector participation is there. You know, DISCOM has been primarily under the state sector, and renewable is majorly taken up under the private sector. So our focus area during the current financial year is renewable as well as the discom. So I think we will be able to maintain the ratio, or we will be largely within those ranges.